Hi guys, it's Ian and this is your weekly market wrap-up video. It is Friday the 16th of May 2025, just coming up to 9:30 in the morning in the UK. We've seen intraday volatility making sort of the FX majors, euro, dollar, dollar yen, sterling dollar, pretty hard to trade on a short-term basis. When we get to look at the chart, we're going to look at DXY first, which is the US dollar index. It will be explained. So we're in a corrective formation, and that's what's causing these spikes in both directions. We're going to break down the time frames, and we're going to try and get a bias for the rest of today and obviously going into next week. We're then going to look at the rest of the FX majors. We're going to take a look at US oil. I believe that's looking pretty promising at the moment. We're also going to look at the US 30, which is the Dow Jones. We'll finish with gold and the Australian dollar against the New Zealand dollar, which I have a bearish bias on at the moment. So let's get to the charts. As always, we're going to start with DXY. So this is the dollar index. I just want to explain what you're seeing on your screen. So middle bottom is the monthly chart, weekly chart, daily chart, 8-hour chart, hourly chart. That's normally 4 hours, actually 4-hour chart, and then down into an hourly chart. These dashed lines are basically my support and resistance levels. So a technique that I developed quite a few years ago now, which highlights a confluence of support or a confluence of resistance. So this is where more than one barrier is noted, and I use those to break down different time frames and to basically give me a bias. I look at Cipher formations, which are based around fib levels, and I also use the Elliott Wave theory. The most productive trade plans that I have are basically trying to catch a wave 2 or the end of an A-B sequence in a Cipher formation. And the reason behind that is quite simple, because then I can work out my risk reward. If it breaks below the start of the wave pattern, that's my stop loss, and I obviously target the 261.8% extension level, and that gives me quite good R rates. And obviously money management is a large portion of trading. So anyway, back to the charts. So the first chart I really want to look at is this chart here, which is the weekly chart, and we can see we've had a bearish 5-wave count to the downside. I believe we've completed an Elliott Wave formation at the week 21st of April swing low, and we can note that these moves higher, if we look at the weekly chart, they're not trending. Okay, so the spikes to the downside, spikes to the upside on all three of these candles. And you've got to remember it's Friday today, so we're probably going to close with an indecisive doji style candle again today. Now that to me basically says that you are correct, and we are in a corrective formation to the upside, and that is clearly shown by this volatility. We're not getting these big strong moves, decisive moves. We're getting intraday bounces basically. And if we look at this chart, and this is the daily chart, there's no clear trend, okay, and that is common in corrective formations. So we know where we are in the big cycle. We're in this large A, B, C formation to the upside. So basically, because it's corrective, we've completed 5 waves. What we really want to be doing, or what I want to be doing, because I look at swing trading, is I want to be looking at trading with what I believe is the long-term trend, okay, and hitting this support level today, 10010 is a bullish signal for me. So going down to this time frame, okay, completed a Cipher pattern known as a bat formation that was completed on the 14th of May, so on Wednesday. We've then seen this choppy price action. Intraday trading again is difficult when we're getting these mixed and volatile intraday swings. But what do we have? Well, we have, or I have, a support level at 100.10. I've got a 261.8% extension level located at 102.07. I've got resistance located at 102.05. So projecting my fib tool, my fib extension tool, onto this chart clearly highlights that I should be moving higher within a bullish Elliott Wave count. And why is this important? Well, going back to money management, I know where I want to get long of dollars. I know where I want to get out of my long dollars, and I know where I'll stop myself out if it moves below the previous swing high, which is over here previous swing low, which is over here at 99.82. This is the most important part of trading and doing technical analysis and looking for your trade plans. And you've got to plan your trade, and then you've got to trade your plan. And this is the most important factor here. 5.62 is your R rate. I'm risking 1 unit to make 5.62 units. Okay, like I say, as long as you stick to this plan, then in the long run you should be profitable. So just to highlight what we've talked about with regards to DXY, and it's always the base, the first part that we look at in our analysis, is that the medium-term bias is to the upside. We've got a nice Elliott Wave formation which points to higher levels over the short term. So I'm trading with that corrective trend to the upside. Let's have a look at the other dollar products and see what they're saying. We'll start with the euro against the US dollar. Again, don't really need to look down to the weekly chart, but we can clearly see wave 1, wave 2, wave 3, wave 4, wave 5. It's a mirror image really of the DXY, because the dollar index, I think, is about 65% made up of the euro against the US dollar. So spikes in both directions, clearly highlighting that we're in a corrective formation to the downside. Evening star formation posted from the high. If you want to look at candle patterns, that free candle formation is often seen at the top of a trend and the start of a new downward bias, so it adds weight to the analysis, the bearish outlook for the euro against the US dollar. We'll go to this time frame first, which is the 4-hour chart. Again, this price action, if you're not careful, getting sort of mixed up and chopped around on the way down. Let's just get this on a shorter time frame. So bat formations, so like I said, Cipher patterns, that completed at 112.66. We then have seen this move to the downside, producing wave 1 in an Elliott Wave formation. I believe that there's still scope for more buying pressure in euro dollar on a short-term basis. Okay, I know that conflicts with the 1-hour chart in DXY, but I think we're likely just to push up and take out this swing high, to maybe take out some weak stop losses before we then move to the downside. So 112.37 is intraday resistance. I'll then look for a move down in the third wave. This is a demand zone, so supply, demand, so up into the supply zone and resistance at 112.37, then down to demand, small correction to the upside. The demand zone is not very deep, and then I believe we will move lower in the fifth wave to complete this first corrective movement, okay, and then a move back to the upside in euro dollar and a move down to in DXY. So 110.11 I believe is a prime target level, support level. 1.1000 is a 261.8% extension level. It looks prime. Again, why is it important to plan out these trades? Possible entry, possible target, possible stop, 5R, which we would be producing there. Sterling dollar has got the same sort of picture, but the only thing I don't have here, I've got the target level lining up with my bespoke support. So 261.8% is located at 13076, and then we've got the support level located at 1.3072. What I don't have is a dash line up here, so I don't have resistance. What's happening is it's actually sort of gyrating, if you like, in between my support and resistance barrier. So I really need to get through this support to continue the move to the downside. And why is that important to me? Well, if I'm playing the US dollar, so I want to be playing a long position in the US dollar, I really want as many indicators or analysis to overlay on top of each other to give me the best R rate. And if I look at this and I say, well, you know, I've got to break this level, so say I get in short here, and then my stop loss is up here, my target is down here, you know, my risk reward factor is 0.6, absolutely pointless. So I'm looking, if I'm playing DXY, I'm looking for the best product to play DXY, and for me at the moment that has to be the euro against the US dollar. So anyway, 5-wave pattern is sort of giving, it's adding weight to the analysis. In other words, you know, euro dollar to the downside, sterling dollar to the downside, dollar Swiss to the upside, etc., etc. It adds weight to the analysis. What I might do when I get down here is I might take a long trade in sterling dollar. So as I get out of euro dollar shorts, I might consider taking sterling dollar longs to then play the reversal in the US dollar. Dollar Swiss, we hit the measured move, we got very close to the measured move target. So this was a channel breakout, could be seen as a Wyckoff distribution zone. Measured move target, which is AB equals CD, located at 84.87. We've started to move higher. Again, this is just confluence, so this is saying, well, this is support for the dollar. We're starting to move higher from this support level, but what I don't really have is a fib or an Elliott Wave sort of pattern. So what I'd prefer to do, if it plays out, is this sort of trade. So getting in on this wave 2 and looking at the other dollar crosses, I don't think this, I think it's more likely that we'll just see an impulsive move to the upside and we're not going to get that retracement in dollar Swiss, but it does offer a bullish bias. Dollar yen, now I think we're going to get a counter trend trade here. So the most important chart is this chart, looking at the big picture analysis. Okay, this is what's known as an expanding wedge pattern. Let me just do that to make it less complicated. Okay, waves inside waves made up of 3 waves, which normally indicates that we're in a corrective formation. We've seen an impulsive move to the downside. We've stalled close to the support level of 145.34. Okay, issue I'm having now with this sort of counter trend or this long-term picture is that we're going to overextend the measured move target, which is 138.89, but there's ample scope for a correction to the upside. So basically wave 1, wave 2, down in 3, and then potentially a short 5th wave, which could overextend obviously down towards this sort of level. So I need to look at different time frames, and the time frame that I'm looking at for this is the 1 hour time frame. Okay, so we've got an ending wedge pattern. It's important to note your target levels, okay, or as they're known as measured move targets. So here we've got a line on there. Work out the swing high, which is 147.13. Make note of the swing high. So measured move 147.13. You want to annotate your chart so that you know sort of what you're looking at. Moving higher, okay, trying to break out of the wedge formation. What normally happens, not always, but what normally happens on a wedge breakout, or what normally happens on a wedge breakout, is that we'll get a retest of the wedge. So what happens is we go up, we find a swing high, which I believe will be around about 145.85. We then move lower, we then retest the breakout level. Now I've got support, it's actually resistance at the moment, but it's going to become support at 145.33. Okay, and then I'm using my projection tool, fib projection tool, to move higher towards this resistance level at 147.34. Why is this important? Because again, just down to money management, I don't want to be buying it now because it's not a confirmed breakout. I'm going to get the same sort of entry if I do get a retest, and again it will give me my risk reward if this is a current swing low. So again, the risk reward factor will come in around about 4.28R. So measured move target 147.13. Why is that important? Well, again, we can't really see it yet. Sometimes we have to be a little bit patient, but if we put that on there and move that up slightly, then instead of an Elliott Wave formation, which I'm just going to drop off the chart, stop confusing things, this would then become a completed cipher pattern. Okay, so same scenario, just at the slightly lower stop, slightly lower target. So again, buying into the base of the BC leg, targeting completion of the pattern. We know our entry, we know our stop loss, we know our target, we know our R rate, we plan the trade, we trade the plan. So just to, I'm not going to go into Aussie dollar, New Zealand dollar, and dollar CAD at the moment. New Zealand took a big boost to the upside. And like I said, we're going to look at Aussie, New Zealand in a bit, but we're going to be a little bit pushed for time, so we're going to get on to some other products. Gold, as I keep on saying, it's everybody's sort of fascination with regards to trading gold. Big picture, let's have a look at the big picture. So the big picture analysis is that we're in an expanding wedge pattern, easy for me to say. Has an eventual bias to break to the upside. However, what will normally happen, and if you ever do your sort of diploma in technical analysis, this is one of the questions that I think you get asked in the exam paper, is how many trend line touches should there be for a defined trend line? And for a defined trend line, as far as the STA are concerned, which is the Society of Technical Analysts, it's free. So what we can see here is 1, 2, so there's ample scope for another touch of this support level before we move higher. We have a support level at 3,100. We've got trendline support at 3,088. I've got resistance at 3,265. I was asked this morning, would I sell at 3,265? It depends what sort of PA what sort of price action I'd got, it wouldn't be in my normal size, because as far as I'm concerned, it would be a counter trend trade. So it would be lower amounts, and I wouldn't be in it for long, basically. What I'd prefer to see, and this is going back to sort of fibs, I prefer to see something like this. Okay, so again, I sort of know where my measured move target, I've made note of it, annotated it. 3,500 is the previous swing high. It's the measured move target for this. What I prefer to do, and it's even possible that we get a sort of a swing low to there, and again, sort of the swing trade idea would be buying into wave 2. And the reason, again, that I keep on going on about is purely because we then have a trade plan, and then we have our rate. So just to talk about what we've discussed up to now in this video offering, DXY has got a mild bullish bias. And by the way, if DXY, using correlation, if DXY has a tendency to move to the upside, then gold has a tendency to move lower, so there's ample scope for that support level. DXY to the upside should mean limited buying pressure in sterling dollar, should mean limited buying pressure in the euro against the US dollar. Expect volatility because we are in a corrective mode at the moment, and gold we've just covered, and dollar yen probably moving to the upside on a period of risk on sentiment. And again, using correlation, what happens if we see markets move to the upside, then we have a tendency to see gold move lower because it's a safe haven product. Other products that I want to discuss, is US oil. We did a report on this morning. I'm just going to drop down. I'm going to leave that like that, actually. So resistance is located at $64.73. Support is located at $60.92. I would, of course, love this to be lower, purely because if it's lower, it gives me a better R rate. But what I do have is I do have a support level. I think it's going to come in good enough with regards to sort of risk against reward. So I've got a support level at $60.92. I've got a wave 3, and this is what I also like to see, is when we see the supply and demand zones, I'd like to see them lining up with 161.8%, because that is the third wave extension. I like a reason why we should see a stalling in price action. So smart money concept traders will be looking at this zone as a supply zone, and then you get this sort of dip to the downside. So wave 1, wave 2, holding on to $60.92 support, stop below the previous swing low, which is at $60.13, up to wave 3 around about $63. This is always a good area to lock in your stop loss. So when it gets to wave 3, then we move our stop loss to target, and then stop loss to entry, and then we've got a free trade, and then a further impulsive move to the upside to complete this bullish Elliott Wave formation, and by the way, to take out probably a lot of stop losses. So again, everybody can look at the markets in different ways. There are right ways and there are wrong ways, and sometimes they overlap each other. Okay, Wyckoff traders will probably see this period at the moment, because they don't really trade off a 1 hour chart, so they'll see this period at the moment as a very large distribution zone. What is a Wyckoff distribution zone? It's when smart money is accumulating either long or short positions. So distribution, they're accumulating short positions. So what they do is they build short positions here. They then move the market to the upside. These are obvious stop losses. Okay, so they accumulate all those stop losses and then they move lower. Obviously, the opposite is applied to the end of a downtrend. So you get that period of what they call accumulation. So this is distribution. You get a period of accumulation, spikes to the downside, sometimes in a fifth wave, and then it just reverses after it's caught all those stop losses. So just sort of highlighting different ways of analysing the market, but coming up with the same conclusion. So that's the US crude oil, WTI. Just want to mention sort of NatGas, because I do believe we're getting towards the end of a sort of downward trend in NatGas. So we had a very nice breakout to the downside. Measured move target for the wedge formation was completed at 3.323. I believe we're now moving lower in an Elliott Wave formation, so something like this. We've got a 261.8% extension level located at 3.163, and we've got a support level, and that's a medium-term support level. It's actually a monthly support level located at 3.143. So although I believe the immediate bias is still mildly bearish, I don't think that this trend is going to continue in NatGas, and that area around about 3.2, 3.1 is going to catch some profit taking. Okay, so on to the last chart, and this was a trade that I've been looking at this morning. What I do like to see is ending wedge patterns, and again, the reason why I like to see ending wedge patterns is because they give me a defined target. So the defined target for the ending wedge pattern is a measured move of 1.0781. We've seen some impulsive selling this morning. Okay, it's flipped the bias from bullish to bearish. We've posted outside candles on numerous time frames, so 8 hour, 6 hour, 4 hour, 2 hour, I believe. Normally when you see those bearish outside candles, it's a confirmation of a change in sentiment. I've got resistance located at 1.0902, excuse me. What I believe is now happening, and what often happens at the end of an Elliott wave count, so this was an extended wave count, we get a wedge formation, but also we get a head and shoulders pattern. So this is the wedge formation. It's given us a measured move target, and then inside, I'm just going to drop off the indicators because it gets a bit too complicated, and then inside we get this, then we move to the downside. There's a projected support level for a bat formation just underneath the measured move target, so 107.81, 107.75. Again, important that we're looking at our rates. If we look to sort of sell into the right shoulder, again the retest of the wedge formation which we talked about earlier, so we're getting that confluence. Okay, if we retest and then we hit this target level, we're coming in at an R rate of around about 4.85. Okay, I hope you found that educational. I hope it's going to be beneficial to you in your trading in the week ahead. I'll be back soon with more analysis. Have a lovely weekend, and all the best.
Ola Prime, trade with transparency.